get to our first conversation. The Lagos Chamber of Commerce and Industry has again expressed concerns regarding the projections outlined in the April 2025 World Economic Outlook and the Global Financial Stability Report from the International Monetary Fund. Now, also the World Bank, during this just rounded up spring meetings in Washington, D.C., the Director General of the LCCI, Dr. Chinri Amona, emphasized the need for prioritizing a well-managed fiscal policy environment. This would facilitate public debt reduction and create a larger buffer to cope with the potential increase in defense spending and trade-related shocks to the economy in the short term. Now, she pointed out that these reports indicate a downward revision of Nigeria's economic growth forecast to 3% in 2025 and 2.7% in 2026, attributed to various global and domestic challenges. Now, these challenges include subdued crude oil prices, which have fallen below the benchmark budget price of $75. I mentioned that earlier. Heightened global trade tensions, weakening demand from advanced economies, and volatility in international financial markets. Let's talk to the president of the Lagos Chamber of Commerce and Industry, Mr. Gabriel Idahosa. He joins me live from Lagos, Southwest Nigeria. Lupeju, precisely. Thank you so much, Mr. Idahosa. It's good to have you join the program this afternoon.
Thank you. Thank you, Tolu. Thank you for having me.
Yes, I'm sure you listened clearly to my introduction, particularly with the fear of the dwindling oil prices. I'm worried about that. WTI is down, Bonny Light is down, OPEC basket is down, and all of this. What do you make of it? Are we supposed to be worried? Or how concerned are you about this?
Well, for Nigeria, if we made our budget at $75 benchmark,
yes,
and we are looking at 63 today, certainly it's much beyond worry. It's now really going back to the drawing board to look at our figures and see what we need to adjust quickly and deal with the reality that we have right now. Getting worried is not going to do anything. What is really going back and saying that, okay, the situation has changed and is likely to remain so for at least most of this year, unless for some strange reason the US president reverses everything he has done in the last 3 months. But it's more likely that he's going to stick it out for as long as he can. So yes, this is a time for redrawing, replanning, and not worrying. Worrying is not going to change anything.
So, Mr. President, you're telling me clearly that worrying is not going to help sort anything out. We must roll up our sleeves and get to work. Precisely, what can we do when we have a situation like this? What options do we have clearly lined up for us to be able to augment this? The most important thing here is how to raise revenue. Where do we start from? The fiscal reforms we're waiting for the fiscal bills to be passed into law. All of this is taking so much of time.
Yes, that's really the thing we can worry about. How long it's taking us as a country to complete a process that should be really much faster. It took us about between 15 and 20 years to pass the Petroleum Industry Act, the PIA. This year, the budget for the year was not done by the 1st of January. And so we are having the accumulation of delayed response to situations or delayed proactivity that is required for an economy that has put itself in a reform mode. The Nigerian economy is in a reform mode. We are trying to move away from an economy that existed within a certain world of fuel subsidies and a variety of exchange rates to a new economy where those things have been moved. And so we need to move very, very quickly, first in response to the reality of the activities of the President of the United States, Second, in the fundamentals of our economy, which is that we cannot afford to begin to have an economy that has its foreign exchange earning capacity defined by the volume of oil and gas production and the open market price. We need to be moving much faster in growing the non-oil exports, to use the omnibus word, for all other sources of foreign exchange earnings. We need to move much faster, and the scale of that movement needs to be much faster. For example, if we are supporting the ICT industry to begin to expand services to African countries and beyond, if we are supporting the creative industry and creative and entertainment industry to expand rapidly to Africa, if we want to take full advantage of ASCFTA, in all of those three cases, we have to move much faster than we are doing now. And the kind of steps to be taken should be much larger, because those are the new, reliable, sustainable opportunities for significant increase in foreign exchange revenue. The domestic revenue space, we are doing a lot already, but as you mentioned, the tax reform process that should have been completed by last year, by December, is still uncompleted in April. So the impact of the passing of the reform bills, maybe by the half year, will only affect half of this year. And so it's all an accumulation of delayed action where we ought to move much faster. And the slower we are, the more external forces catch up with us. If we had diversified our sources of foreign exchange, then whatever was happening now from the US president will not be as impactful on us. If, for example, we were getting more than, say, 80% of our foreign exchange earnings from non-oil sources, then we will not worry whether the price is 75 or above 75 in the world market. So those are the factors that we have to look at.
Now, let's now look at recommendations from the LCCI in recent times. You've always come up with your quarterly briefings and all, and suggestions, of course, for government. The recent one is government, the LCCI is urging government to, look at fiscal reforms so that we could address these economic projections that we see. What sort of fiscal reforms particularly are we looking at now? Is it the same expectations from the Taiwo Oyedele-led committee, or what more are you looking at for government at this time to address these projections and reprojections that we are having in recent times?
Well, the Taiwo Oyedele committee is only looking at tax revenues, everything around tax revenue, that can significantly increase when they are implemented. But there's a huge space of fiscal reforms around private-public partnerships in financing massive infrastructure. There is a big space of using our national assets as collateral to get much lower, much more favorable lending from the international community. There's also the space of the sales of our assets, if we are not using them as collateral to get cheaper loans. The sale of the assets, which of course the Bureau of Public Enterprises is looking at. Again, we have not seen the kind of speed that we are supposed to have in beginning the sale of assets. And to put it in the right perspective, we are not talking of wholesale sale of any assets. We are looking at the very successful Nigeria LNG model, where we can take some very good assets and sell a significant percentage, 51%, to bring investors that will expand the capacity of those assets to earn much more revenue. And Nigeria will get at least 49% of the increased revenues. So these are big areas of fiscal reforms that are doable, easily doable, because we have the experience We have the experience in the PPP space, the Nigeria LNG space. We have the experience already in some cases of assets that were collateralized, but we need to do it at a very large scale. We have a lot of idle assets across the country, whether it's real estate here in Lagos or even right there in Abuja and across the states that are owned by the federal government that are just idle, completely idle. They are abandoned or not used to generate income where they should. So if we begin as a country to look at these fundamental opportunities that are continue to be available and move very quickly to realize them, then we can still be hopeful of meeting the targets of this year's budget significantly. But if we stay at the current pace at which we are working, it's almost certain that we are not going to meet a significant percentage of all the targets in the current budget.
Let's talk about the need for policies that would help reduce public debt amid buffers to manage increased defense spending and other fiscal issues. Now, what do you think can also be put in place with regards to debt? Because we cannot continue to mount up debt. And if we have issues with revenue generation from oil, we have no option than to borrow. So if we borrow and we already have debt on the hand, on ground, what policies do we need to institute for us to address this shortfall?
Well, once you, in this case, you have borrowed far more than you can service from your current revenues, then you want to look at some of the other options we have talked about. For example, can we convert some of those debts into other instruments, equity or longer-term bonds? Can we do that? It's a matter of how determined we are to present a package that makes sense to both local and foreign investors. If essentially those assets, most of them are profitable. Look at our airports, our seaports. These are enterprises that are profitable in the long term any day. But even the airports that we have talked about concessioning or partly selling shares have not been done. So if, for example, we are able to sell 49% or even majority percent of all of the assets in all our international airports, that can go almost immediately into reducing some of our indebtedness. We are just speaking specific assets, but there are a lot more assets of this nature where government can say, we need to take the action now. We knew we should always do it, just like we knew we could always remove fuel subsidy, but this government had the courage to do it. So government has to pick up that kind of courage and do those things that can be done. As a country, we cannot afford to have assets sitting all over the country that we can monetize, either by selling some of the equity in it or outright complete sale of the assets, or using them for collaterals on a project funding basis. These options are there, they are doable, but it requires government deciding that it is time to do it. And once government decides it's time to do it, it will be done.
It's getting more interesting now. We've seen a bit of stability in exchange rates. We've had this conversation before, Mr. President, and commending the Central Bank of Nigeria, but also halting CBN's financing of deficit financing is something that experts, professionals like you have said, is a step in the right direction. What more are you expecting from the monetary side?
Well, the monetary side has done very well, very, very well in the circumstances we find ourselves. And we can only expect that particularly they sustain what they are doing now and remain very consistent and committed to doing what they are doing now. That's really the first expectation. Then going forward, we expect that the achievements they are making now will attract some flows, some investment flows, at least in the for foreign portfolio investment space. We are also seeing significant foreign direct investment commitments being made by some countries and significant international enterprises. But the flow will come slowly because it takes quite some time to take these big decisions about the final investment decision on a major project, for example, will take several months after the initial commitment. So we expect to see some of the benefits of the work of the central bank in the latter part of this year, where some major decisions that have been taken now and towards the end of last year will begin to convert into flows of both foreign and domestic funds. There's significant domestic commitments that are coming in some of these major projects. And of course, a lot of unannounced projects that are being decided in the boardrooms of companies around the world. So we expect that this stability will continue. The threat to the stability was this sudden decline in the price of market price for crude. But even with that, the central bank has done a great job of stabilizing the market with the various policies and measures that it has put in place. And I think the international finance community, particularly the financial services community, are happy with what the central bank is doing. And we are seeing a lot of cooperation by various stakeholders in the international financial community, and some projects that are now in the works that we expect that in between the third and the fourth quarter, a lot of it will become public knowledge that will help to improve the flows of foreign currency into the country on a sustainable basis.
Sustainable basis, indeed. I agree with you. Finally, before I let you go, Mr. President of the Lagos Chamber of Commerce and Industry, the issue of a $1 trillion economy is another conversation that we've been having in recent times. The central bank, the federal government, all arms seems to be focused on heading to this $1 trillion economy. But how feasible is this, considering the realities on ground? We just talked about that off camera, that even the United States economy for the Q1 of 2025 is going into negative, and that's really threatening. So if we look at all of this, what do you make of Nigeria's move aimed at hitting the $1 trillion economy? We know the banks have a great role to play in this. How feasible is it in your thoughts?
Well, any target will have to be a moving target, because the variables around which the Nigerian economy, like any other economy in the world, is working are partly local and definitely significantly international. So as we make our targets, as we work towards them, there are a lot of moving parts of the international economy that will affect our capacity to achieve that target. One easy one is the exchange rates. Our economy is growing essentially as a Naira economy. So for you to get $1 trillion US, you have to convert our GDP in Naira at a certain exchange rate. So as the exchange rate moves up and down, the $1 trillion targets translate into different figures in Naira. So I think what, as a country, we should do is to use that US dollar trillion target as a motivation, as a driver of efforts to grow the economy much faster and to take opportunities that are unfolding. For example, where we are now, the opportunities to open export markets in several other countries outside the United States are becoming very interesting, because there's a mutual desire by various countries outside the United States to do more business between themselves, because the US economy is 13% of world trade. It is 26% of world GDP. So it's 7% of the world trade that is outside the US is open for everyone to take a bigger part of. And so that will be should be the mindset of both the government and the private sector in Nigeria, that we need to work very hard to deal with unexpected risks, but also take great advantage of expanding opportunities. And that is one thing as a country, particularly the private sector, is looking at. And we hope that the government will support the private sector. It's going to say now that a lot of other countries are looking for business partners to grow the volume of business they want to do with other countries. As US want to create another world for themselves outside the rest of the world, what is Nigeria doing in that space? AFCFTA opens our first opportunity, but beyond AFCFTA, other continents in the world are looking for business partners. And when it's Africa, Nigeria is certainly number one. And we hear all this is happening from our position in LCCI. We have a lot of countries that are showing a lot more interest in doing business with Nigeria and expanding what they are doing, because there's a mutual acceptance of the fact that the US market is moving itself out of the picture of world trade.
Mr. Gabriel Idahosa is the president of the Lagos Chamber of Commerce and Industry. Always an interesting chat with you. Thank you so much for joining the program. Enjoy the rest of your day.
Thank you.